How's everybody doing? Information overload yet? You ready for part 2? It's always challenging going after somebody like John. A lot of good information, a lot to think about. What I'm going to try and do is take you inside and give you a look at what it looks like for our real estate investing. What's the difference between investing in a public REIT and investing in what we call SPIRE? So John's talked about publicly traded REITs. So that's one way you can invest in real estate. There's volatility, there's cash flow, but it's still invested in real estate. Another way you can go is you can invest in what we call illiquid real estate. You can buy a building, you can invest with other investors like we did at the start through single purpose limited partnerships, but you have something that's relatively illiquid. The space in the center is what we refer to SPIRE, and that's what I'm going to be talking about this evening. SPIRE is like an institutional product in that we're investing in large commercial assets. We've got diversification of market and location, but we've addressed the illiquidity issue by making it an open-ended limited partnership, which enables you to add capital as you want to add more money to your real estate investments, and when the time comes you want to sell, we don't have to sell the assets, we can give you liquidity back out the other end. So in the time that I have available this evening, I'm going to talk a little bit about investors, investment, and management. Because one of the things that I see, I often have people come to me and say, well, what about investing in this? There's this investment over here. I think that, I'd like to look at that. And what I find when I kind of, summarize it all down is that there is often a breakdown between what the investor's expectations are, what the investors are looking for, what the management is focused on, and what the real estate is intended to produce. So I think it's worthwhile for those of you that aren't clients of Nicola Wealth Management but are thinking about investing in real estate, those of you that are clients and are invested in SPIRE, for you to have an understanding of what it is that we're really focused on here. So I'm going to talk a little bit about investor objectives, a little bit about what we focus on as management, a little bit about property criteria, and then touch on some strategic partnerships, and then summarize it at the end. I have to start off with a confession though. When I started putting this together, I'm excited about what we have built over the last 13 years as a platform for real estate. And I started putting slides together, and I put together enough material for about 3 hours. You don't want to be here 3 hours. I don't want to talk to you for 3 hours. So what I'm going to do is I'm going to be touching on just high level some things that I hope are going to be of interest to those that are not real estate savvy at all, those that have some real estate knowledge, and those that are thoroughly familiar with investment real estate. When we look at investors, in order to invest in SPIRE, you need to be a client of Nicola Wealth Management. So when I'm referring to investors and I'm referring to SPIRE, that's the group of investors who have chosen to invest through the asset manager, which is Nicola-Crosby. We manage the assets, and we invest in hard asset real estate. We want to have alignment between the investor's interests, the asset manager's interests, and the property. So what I'm going to talk about is the investor objectives, the property criteria, and the management focus. Let's first look at investor objectives. As investors ourselves, what are we looking for? I think one of the differentiators for us is that I'm an investor in SPIRE, John's an investor in SPIRE, all of our partners are all investors on the same basis as everybody else that's invested in SPIRE. But what are we looking for as investors? We want to own real estate. We want an attractive investment. We want consistent distributions. We want competitive returns, adjusted for rate of inflation over time. Nobody's interested in losing money. And John, painted some scenarios, and I'm going to try and address those a little bit later. What are we doing to preserve capital so that we don't lose money in real estate, recognizing that there are cycles? We want to make sure that our objectives are aligned between investors and management. And we want to have diversification. If I, as an investor by myself, just go and invest by myself, I'm going to be limited in terms of what I can invest in and how far that capital can go. If we pool our capital together, we can get larger assets, better located assets in multiple markets. We can get diversification. and that helps us in the long run. I'd like to just touch on a couple points for our quarterly reports. These statements come out each quarter. If you're an investor in SPIRE, you receive one of these in the mail. There's a Canadian LP and a US LP. The Canadian fund, first thing I want to draw your attention to is portfolio occupancy. Occupancy matters. If you have an investment and it's vacant, you have to pay the costs. You still have to pay the property taxes. You have to pay the operating costs for that vacant space. If you can keep your portfolio fully occupied, the rents are there to pay the mortgage, they're there to pay the repairs and maintenance, they're there to pay the cash flow that you want to distribute. So occupancy matters. Since inception, we have maintained a high occupancy for our portfolio, both in Canada and the US. That's important to note. Something else I want to draw your attention to is performance. Performance matters. People ask me, well, what should we expect out of real estate? Since inception for SPIRE LP, this is the Canadian fund, we've had a 9.9% compound annual return on investments. I refer to real estate as being a 10% business. If we can generate a 10% return from rents, from amortized debt, from value-add strategies, and from buying in the right location and capital appreciation, if we can get those all lined up, some years we're going to do better, and you'll see in a moment in the US we're doing better right now. Some years we're going to do a little bit worse, but over the long term, our objective is to get a 10% return. The beauty of what we have with SPIRE, if you look at $100,000 invested since inception, to today you'd have $211,000. But notice the trajectory of that return. It's straight out. There's no volatility. And that's what we really try to do, is eliminate some of that volatility. Something else I'd like to draw attention to, the gross asset value, the diversification. When we started SPIRE in 2005, we were just investing in BC. Now you see that we've got assets in BC, Alberta, Saskatchewan, Manitoba, and Ontario. And a little bit later I'm going to touch on some assets so that you get a picture of what we're actually owning, what we're buying, and why. Now to the US, similar style report. Again, briefly focusing on occupancy, 94%. One of the differences between our Canadian portfolio and our US portfolio, in the US, we've got about 65% of our portfolio in multifamily apartments. I'm going to talk about why that's important and why that's significant and why that is a good place to be right now. But high occupancy. If we look at performance, again, since inception in the US, just over 10%. Distribution, we're 5.5%. We've raised it from 5 to 6% during the year. I failed to mention on the last slide for the Canadian, we're at 7.2%. And the returns since inception, again, that trajectory, it's pretty consistent. There isn't a lot of volatility. Since 2010, we started in the US market in 2007, just kind of dabbling with small investments, but we really started to ramp it up in 2010 when we could see the recovery of the US taking place. And we now have assets in Washington State, in Texas, in Georgia, in California, and Florida.